Assalamualaikum and hi, my name is Afiqah Aneesya binti ZAINOL and I am from BA244A. In today's video, I'll be presenting about Sunway Group Berhad for the subject Investment and Portfolio Analysis, FIN552. Founded in 1974, Sunway Group pioneered sustainable development by transforming a tin mining wasteland into Sunway City, Kuala Lumpur, an integrated, smart and sustainable township. On top of that, Sunway Group Berhad specializes in a diverse range of businesses including real estate development, construction, hospitality, retail, leisure and entertainment, commercial properties, trading and manufacturing, building materials, quarrying, healthcare, education, and also real estate investment trusts. Moving on to the next part, that is the financial statement of Sunway Group. It shows that in 2023, Sunway Group sales increased by approximately 18.14% compared to 2022, rising from 5,194,949 ringgit to Rm 6,136,199 ringgit. So this significant increase in sales reflects the company's growth and momentum and improved performance. Meanwhile, for its profits, the profit increased by approximately 15% from 744,860 ringgit in 2022 to 855,656 ringgit in 2023. So this growth indicates improving financial performance, potentially driven by increased revenue, cost efficiency measures, or a combination of both. Between 26,063,407 ringgit in 2022 and 28,583,816 ringgit in 2023, the assets grew by about 10%. So this growth points to an increase in the company's asset base, which can be the result of acquisitions, increased infrastructure spending, or an increase in receivables. It is indicative of the company's sound financial standing as well as its prospects for future expansion and profitability. Meanwhile, liabilities went from 12,511,942 ringgit in 2022 to 13,583,479 ringgit in 2023, an increase of around 8.5%. This increase implies that the business may have taken on more debt or commitments in order to fund operations or expansion. Although growing firms may see modest increases in liabilities, rigorous management is required to guarantee that debt levels stays manageable and do not adversely affect the company's financial situation. Last but not least, the equities. Between 2022 and 2023, the equity climbed by almost 10.7% from 13,551,465 ringgit to 15,037,000 ringgit. So this expansion shows that the business has more assets than obligations, which strengthens its financial positions. It implies that the business either kept profits or drew in new capital, increasing shareholder value and opening up new growth opportunities. Next is the financial ratio of Sunway Group. Firstly, for the earning per share, it is stated that the earning per share is Rm 0.2 cent. It is indicate that the company generates sales with this amount. Secondly, according to the calculation, Sunway Group has a lower level of debt relative to its equity, in which 0.29 times. Thirdly, Sunway Group Berhad have a good current ratio, whereby they have the ability of repayment with 1.07 times. Next, the return on assets. This return on assets of 2.3% for Sunway Group suggests that for every unit of assets the company holds, it generates 2.3% in net income. Lastly, Sunway Group has a return on equity of 0.14%. It's relatively low and may be considered below average in various situations. Another part of this video is about the unsystematic risks of Sunway Group. The unsystematic risks for Sunway Group are weather irregularities and foreign exchange risks. To overcome these two risks, Sunway Group can enhance risk management framework to incorporate strategies specifically tailored to mitigate the impacts of weather irregularities and create a currency diversification which can help mitigate the impact of adverse exchange rate movements. On top of that, Sunway Group also have the systematic risk. The systematic risks for Sunway Group are inflationary pressure and competition. To overcome these two risks, Sunway Group can do market monitoring and adaptation. This may involve adjusting pricing strategies, introducing promotional campaigns, or launching new products or services that resonate with changing consumer preferences. By staying agile and responsive to market dynamics, Sunway Group can effectively manage the risks associated with inflation. Meanwhile, for competition, Sunway Group can invest in research and development to innovate and adopt advanced technologies that enhance operational efficiency, reduce costs, and improve product or services quality. The last part of this video is about the company growth prospect. Assessing Sunway Group's growth prospects with a price-to-book ratio of 42 cents demands thorough analysis. Comparing it with industry peers is crucial. A lower ratio may signal undervaluation and growth potential. A return on equity of 0.44% indicates suboptimal performance in profitability and efficiency, suggesting minimal returns compared to shareholder equity. And that is all for today's presentation of Sunway Group. Thank you for listening.